Good evening, everyone, and welcome. Who says not much happens in the markets on a Friday before a long holiday weekend? Despite light volume, investors pushed the S&P 500 to a new record closing high, closing at 1,900, basically on the button for the first time ever. Stocks got a big boost from better than expected new home sales last month, and we'll talk housing in just a moment. For the week, the U.S. markets had their biggest gain in more than a month. The beleaguered Russell 2000 and the recently pressured NASDAQ each gained more than 2% this week. The Dow Transports closed at a fresh all-time high today. And here's how the major averages finished for a Friday heading into the holiday. The Dow up 63 points. It's now higher for the month of May. NASDAQ was up 31 today, and the S&P 500 added 8.
Well, as Tyler just mentioned, there looks to be a spring thaw in the U.S. housing market. Sales of newly built homes recovered in April, shooting up a better-than-expected 6.4%. That follows 2 months of sharp declines. That helped lift shares of some of the nation's biggest home builders. D.R. Horton and Lennar jumped 4%, and Hovnanian and Pulte Homes also posted big gains. So is it time to invest in the sector? Joining us to answer that, Bob Brusca. He is chief economist with Fact and Opinion Economics. Bob, I know you're not very optimistic about the outlook for housing. Tell us why.
Well, I think that we've got a lot of headwinds in the housing sector. We've got, first of all, an unemployment rate that's low, but not because people got jobs, but because they've dropped out of the labor force. And so those people aren't going to be home buyers. We've got an economy that generally isn't growing that fast. We've got still a difficult time getting financing. A lot of banks are still very careful. They've gotten their hands burned in the past by lending in the housing industry, given some of the government policies. And so they're wary. And so housing financing isn't there. And we've had a hard time getting first-time new home buyers in. They just aren't able to qualify because of the credit standards that banks put in their way. And so as a result, when they try to buy a house, they're trying to buy a house at a much higher mortgage rate than people with the best credit ratings. And so these are headwinds that you have to face if you're a new home buyer.
Let's bring in Will Randall from Citigroup. Will, welcome. You were with us last fall. At that time, you were pretty optimistic about housing. How does your mood on housing compare today to what it was then?
Sure. Real quickly, I mean, we upgraded a lot of our stocks back in early December as we saw sequential momentum above the normal pace for November sales. We then downgraded early March because we saw some market softening. Now, this is very local, specific markets. It's not particularly the whole nation. Plus, we had some cold weather. How I feel today? Good, not great. I would agree the first-time home buyer is a much smaller percentage of sales. I call it 1/4 relative to 40%, if you go back historically. That being said, let's not forget the FHA head has just changed. It's Democratic bent. And the FHFA, which does about 75% of mortgage production, is now saying they want to play ball with the banks. So I feel a lot better than I did when we downgraded those stocks in March.
Bob, react to what Will was saying, and also I'll just add in another, what I think is a positive development. We saw mortgage rates this week dropping across the board. The 30-year mortgage is down to 4%.
Yes, mortgage rates have come down a little bit, but, really they're oscillating at a pretty low level right now. I don't think they're changing very much, and I don't think this drop is going to cause people to be able to go over the affordability hurdle. As far as the regulations, the changes in the way that some of these agencies are going to deal with banks, I think that you have to be careful. The banks are going to be, I think, somewhat wary because they've been burned in the past. So there's a little bit of good news that might be there for home buyers in the future. But I think you have to be wary. The banks are going to be wary about thinking that this is a new regime because it's still a very difficult world out there for lenders.
Let me get both of you to answer the following question. Bob, when I hear you say you're not optimistic about housing and you see a lot of headwinds for housing, does that suggest that you think house prices on average nationally are going to fall a year from now from where they are today? And Will, would you answer the same question? Bob, you go first.
Yeah, I don't think you're going to have much gain, or you could have a decline. House prices have increased a lot. New home sales are already lower year over year, so we've already seen that happen, and I think that they're going to be challenged moving forward. Although I do think activity in the housing sector will improve a little bit, I don't think it will improve by much.
Will, do you agree with that or disagree?
I would disagree from the perspective of that house prices go negative, all bets are off because sentiment will die for housing. If that happens, all bets are off. That's first point. Second point here is I do think we will see improvement and we will see moderation in home price appreciation. That's natural. Why? Because inventories come back to the market. If you look at the case Schiller, we'll be up 7% instead of 11% within the next 2 months. That's not a bad thing. We need moderation, and that's good for housing.
Will, I know you've been just starting to recommend a few of these home builder stocks. Which ones do you like and why?
We recently upgraded D.R. Horton, ticker DHI, and Masco. Really what it came down to is we thought we were getting kind of a bottom in terms of sentiment for the stocks, number one. And more importantly, the regional diversification is important here because if you look at some of the Southwest markets, that's where it's got a little frothy. That's where it's got a choppy, and that's what we're worried about. These guys have national exposure, so they should benefit from easier comps in the second half, which a lot of people aren't focused on.
All right, gentlemen, thank you both very much. Have a great weekend. Appreciate you coming on the program tonight.
Thank you.
Will Randolph from
Thank
Citigroup, Bob Brusca with Fact and Opinion Economics.